welcome to today's video, which is called Why This Spy Bloodbath. And bloodbath it was. Paul proved that he was no Santa, and today we will dive into the reasons why and what it did with the markets, and more importantly, what to expect in terms of upcoming price scenarios in equities. You know my site, what I do, the full scope, all the behind the scenes support for clients. You are for sure subscribed to this YouTube channel with notifications on. Thank you again for liking, subscribing and commenting. Same goes for the free Telegram channel and the rich Twitter feed. So, such was the view of yesterday presented yields chart that was published and recorded well before the opening bell, when I called for Fed Day danger, and you might remember the poll that I ran on Twitter, and it turned out as a real curveball. The point was that during Tuesday we saw a pause in positioning for less rate cuts ahead in 2025 already, but a pause and rejection and uncertainty. So you remember yesterday's video? If not, then just run through it again if you wish so. Otherwise, just follow what I will be explaining and summing up as we go forward. I was asking where is the leader, whether it is IGV slowly waking up semiconductors, communications, or discretionaries that I took a great dive into on Monday, into, well, something between 10 and 15 tickers examined, so you can review that video as well. And the peculiar case of three areas: financials, regionals and small caps. What were the signs? We had seen as well market breadth deterioration reaching oversold levels, but as the saying goes, what is already oversold can get even more oversold. So you remember as well the chart that I will feature updated on about those peculiar three sectors that had been taking a nosedive really for quite a few days already before that, but rotations have kept SPY and QQ that was still leading quite elevated up till FOMC day yesterday. And the run up to the session, to the announcement, was really good. It continued with rejection of opening bell selling and solid gains, but there were quite a few curveballs, and it's not about emerging markets or China that I discussed at length yesterday, their constant reflationary efforts. Remember as well that my most basic call for yesterday was for a hawkish cut, where markets were caught off guard and where most participants expected some selling to materialize during the session, me included. It did not happen, and for a few reasons. At the same time, before this bloodbath reached its midpoint, as soon as I saw that the conference is not at all helping, that there is rather more confusion created than clarity that would allow for a rebound, I issued an intraday update for swing trading clients and those in the intraday channel with Ellen. They knew as well that I expect more selling to come, and it was 2 straight hours of heavy selling across the equities board. So in case you were a client, you were spared, and you had very limited risk exposure during the major setback, and it will take more than a few days to clear out. So the next chart is about yields, and I'm charting just the 10 and 2 year, not as a spread but as an overlay, because that's the way I prefer it. And you see, because it's been the end of the quarter, we got the dot plot, and it moved significantly more on the hawkish side, meaning less cuts projected, not just for 2025. It's always about the expectations, and they were already hawkish going into FOMC, and yet Powell managed to out-hawk those expectations with the actual delivery within the announcement and the written statement, and even more so muddied the waters during the conference. So we had seen those yields on the long end correspondingly rise more than on the short end. And it of course affects all three indices differently, because not everything is as dependent on cheap, easy money as the other indices. There are considerable differences between, say, Nasdaq and Russell 2000. But clients know what I think and how I assess the market moves as we go along. The following chart, sorry, I did not insert the chart that is attempting to show that junk corporate bonds declined steeper than the quality debt instruments did, which is as well just a risk-off sign that is further strengthening the message of this chart. And this is the chart that is comparing the actual dive that those three peculiar indices, which were the last chart of yesterday's video, I'm connecting them all and telling you a story, and within today's article I will feature the missing chart from this presentation, and of course dive into more details. So be sure that you are subscribed and following this YouTube channel, and as well have a free account at least on my site, and be my guest in upgrading to premium services to make the full advantage of the full scope of what I do for you. So you see volume dramatically picking up. It's sell first and ask questions later. It was not just about the dot plot, but the point about the uncertainty was what's going to happen regarding the tariff situation, whether it is within North America, whether it is with China, what's going to be the role of Europe, and so on, how the friendshoring goes. And it's frankly not the part of Fed mandate to introduce this uncertainty. I haven't heard Powell in the years before to discuss fiscal dominance, those spending bills, and what it does to the value of the dollar or to the job market. The job market is holding up pretty well, and US will become and will remain to be the relatively stronger among the very strongest places when it comes to economic growth in the year ahead. But here you can see that nonetheless, and it's not just about the emerging markets covered yesterday, or China talked more on Twitter for almost a week. It's about industrials, materials and energy that took a very steep dive. And summing up, we saw the market breadth already oversold, it got even more oversold, and now they came for the generals as well, where the picture is kind of mixed, but market breadth took a steep dive, and this is just one part of what I'm covering in the premium analysis with clients. Today I will feature more charts and extra commentaries with them, so be my guest in joining. Thank you, and let's get ready and make the most of what is going to come next. And just a few words of what may be coming next. Is it going to be some kind of a recovery that can bounce, or is it going to be something with conviction, dusting oneself off and just trying to rise? Well, that would be the more worrying one. I would prefer to see a V-shaped recovery, which is exactly not what I would be seeing pre-market today. So there is more trouble ahead, and next couple of sessions we should all be cautious when trying to pick opportunities on the long side, because question marks reserved for clients. Be my guest, and looking forward for giving you more updates as we go. Have a nice day.